The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends. And boy, if you've been asking for action, you got it. And as they say in China, and maybe elsewhere, be careful for what you wish for. But, we've got a lot of stuff that was just moving incredibly fast today. We go to our correspondent, Ron Burgundy.
Boy, that escalated quickly. I mean, that really got out of hand fast.
It sure did. And just about everything that you could think of out here has been moving rather wildly during the day. I thought, it just didn't take much to move a great deal of these stocks. One, I guess he's highly regarded. I don't know him that well. Analyst was on, and he said something bad about Apple. It lost $2 in, 2 minutes. It's been one of those days where it is shoot first, shoot often, and then shoot some more before actually thinking or even looking. And a kind of interesting day out there. I made some money early on in the first few minutes of buying some out-of-the-money calls. Got at them fairly quickly. And if you've been listening to the show for a while, I was looking for the S&P to go to a 12,990. We got to 12,990 and 34 cents. And I instructed my customers to buy some calls, out of the money calls, 10 cents calls, because I think we're probably going to come up and close at like 2010 or 2015. But we'll see how it ends up here. But I think it's going to be a nice day and make some decent cash. I know a lot of people are going to try to push this to 2,000 for the close of the day, but I'm seeing a great deal of things like the put-call ratio went to an astronomical level it hadn't been in 3 or 4 years or something. A bunch of other things that make me think that we're not at an all-time low. We're not just going back up to the highs, but that we hit probably the target that we were aiming at. I just thought it would probably take a long time and be miserable on the way down instead of happening in 3 days. But we got it all in 3 days, hit that target. We've pretty much hit it to the penny. I mean, at 1990 on the S&P cash. But now the question is, if this is a bottom, where do you want to pull the trigger on this again when it bounces? And, with this kind of movement, it's kind of tough to think that, or maybe you're a little greedy if you made all this cash in 3 days and think that you're not going to give at least a good hunk of it back. But what else can you say? Of course, we've got monster volume in the markets, almost 3 billion shares as we start the day. That means we're going to have that probably 4.5 billion shares. It's also going to be volume that we haven't had on expiration day in 7 years, something like that. It's going to be an enormously big anomaly in stock data. And that's how things work in the markets. When they get out of whack, they get even more out of whack. But we've got a lot of stuff to talk about today. But that starts the market out here. We will see how I end up at the end of the day with my little out-of-the-money calls that we bought down there at 1990. But we shall move on. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, what else can you do? You can put a message in the den. But having a good time out here. We got some other things to talk about, and it's probably going to be a little quiet over the next hour. So maybe it's a good time to take a drink, sit down, listen to the old Power Trading Hour. But I do digress. Anyway, today we've got a little history that didn't happen on this day, but I think is probably apropos. I've been struggling to figure out exactly what, if anything, this movement has been like. And one of the things that early on that Tom O'Brien said when I was just learning to trade and listening to him as a spectator was that you need to go through a few market cycles before you really figure what's going on. Of course, the more cycles, the more thing you pick up. Probably one of the reasons why I wasn't really sure how everything was working out is something that started about pretty much the year before I started trading full time. That was a thing that they called the Committee to Save the World. What happened in 1997? That was that Japan decided to devalue its currency. And the Thai baht, believe it or not, anybody know anything? When's the last time anybody talked to anything about Thailand to anybody? Well, the Thais, of course, decided that they were going to do something, and the ripple effect just took off. In fact, that ripple effect did not stop until 1998, where it blew up in Russia's bond market, almost taking out the entire markets with the long-term capital management. Nothing exists in a vacuum. Nothing is new under the world. It may not be exactly like it is. In fact, there are more different kinds of snowflakes than there are atoms in the world or atoms in the universe. But scientists have pretty much narrowed down that there are 35 major types of snowflakes. And much like that, you can pretty much figure out, and categorize stuff. There are 2.5 million different poker hands that you can have. But statistically, about 50,000 of them are within 0.5% of each other. So if you're playing poker, once you've played it long enough, you've probably seen or are familiar with the odds of winning any particular poker hand. Again, pretty much 50,000 of them is all you really need to know because they're so close to the actual 2.5 million. I think it's 2.58 million possible poker hands. But there is nothing new. I struggled this week to really figure out what it was, and somebody had an article. I got to reading it, and I wasn't sure which idea and how the market was going to unfold because I didn't know the history and when this had happened before, really. Got to read about it in the last few days, and it was today that I was pretty much sure that this was what truly was happening in the marketplace, and the competitive devaluation had run into the different markets, and that's why we're seeing the kind of three-day movement that we have. But like I said, that was 3 days. I've been doing this since pretty much full-time since October of 1998, and this was just 1 year before me. So I'll learn more. I now got to experience it. I'll put it in my bag of tricks. It may be another 17 years before it happens again. But like I said, there's nothing really new under the sun. We have more to talk about in China as we go along. There were some big men of the street out professing all manner of things today, moving the markets, and we'll get more into that as the show unfolds. I was saying that there was a reason that a lot of things happen. In fact, if you can't hear it, probably don't and can't hear it on the microphone. If I suddenly go offline, it's because I've been hit, not me personally, but whether the house has been hit by lightning, whether it's dancing all around us at the moment. So just want the engineer to know that if anything happens, it's probably not going to fix itself in less than 5 minutes. But just to let everybody know. Always interesting comments in the den. And again, anyway, back to this. One of the things that really cemented the competitive devaluation to me today was the stocks that were up versus the stocks that were down. And we'll get into that. I think I've got this up here. But, there were a handful of stocks up. Some of them had earnings, and we'll talk about that in a moment. But there was a stock that was up today, and it was pretty much horrible. Now, it kind of went and filled a gap. That gap came on fairly large volume. That was from the earnings out here. So it's not incomprehensible that it stopped there, but that it rallied fairly significantly from the open was. And, of course, Western Digital had been on a downslope. We'd been short this several times in the Tech Insider and made some very good money on it. Pretty bearish outlook on Western Digital, Seagate over time. I think fundamentally they've got some real problems. So why would a stock like this rally on a day like this? Guess what? They're made in Indonesia. They're made in Thailand. And guess what? The competitive devaluation made its way back to the Thais, back to the Indonesians, back to the future. And that's what I'm thinking about today, back to the future. That's pretty much what we're looking at. And when you look at that, or you look at Seagate, or you look at anything that really had a lot to do with cash being in a couple of those countries over there, they're rallying today because of the devaluation, not because of anything else. Business didn't suddenly get any better. It just, a lot of people thinking, you know what? Their goods, cost of goods just went down 5% today, or 7% this week, and we're going to rally those stocks. Is that going to change the long-term outlook on any of these stocks? The answer is no. But if you're wondering about why some stocks are bouncing today, there are reasons. And HPQ, especially if we are thinking that we get a decent pullback today on the market, and that 1990 holds as a low for a short term, which I think it probably will. In fact, we'll get to the SPYs in a minute. But even Hewlett-Packard had earnings out. They pushed it down, 75 cents? No big deal out there. In fact, it was up fairly significantly before one of the gentlemen that is hugely short the stock, and I'm not saying go buy it. I'm just saying that it's up. But it's probably not as bad as a lot of people thought. So it kind of came off the bottom. It was up a little higher before noon. A big noted short seller rained on it and took about 75 cents off of the price at lunch. That noted short seller was Jim Chanos. And I have to say that he had a very interesting comment about China. And we all know how I like China. I like Chinese. I like Chinese. But we're going to a break. When we come back, do a little 25-second clip of Mr. Chanos. We'll go to the projections from the SPY and SPX and look and see where this market might bounce if 1990 in fact holds, which I suspect it will. That was my original first target. That we got there in 3 days doesn't make me think.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hewlett-Packard, of course, Hewlett-Packard's earnings were the last that it will ever have. Of course, it's splitting up, and it's interesting. We were talking about Jim Chanos, the noted short seller. Although he makes money long, I guess if you make money short, somehow you tend to be a lot more both demonized and saintinized. What is a saintinized? Sorry, I'm not Catholic. Becoming a saint. I'm sure that there's cantonized. Is that it? I think that's it. Anyway, he had this comment, and I thought it was very interesting. I kind of had felt this way. We talked about the problem in China a great deal, and I always had been saying that China is where most companies went to throw huge amounts of cash away, thinking that they would ever get business. But he had a very interesting take on China and its problems, and I just wanted to play this short clip for you.
For us in the past few years is just how the political situation has changed under Xi Jinping. He's a much different person than everybody thought he was. He's a strong leader. He's a nationalist. He's anti-Western. And so under the previous two regimes of Jiang Zemin and Hu Jintao, China was open for business. And that's not really the case as much under this regime. I think people are coming to grips with that.
And I was very interesting. There's a longer discussion. You can find it on CNBC out there from noon. And he had some other things, but, we talked about just about anything moving stocks fairly strongly. He did announce that he had put a huge major short and had been short for a while, probably back up in the $50 to $60 range on Solar City. We'd been talking about this one for a while. It's finally getting back to probably where some level of support was going to be. But I kind of thought that maybe I had graduated into the big leagues because his discussions were basically so close to mine. Doesn't really take a technical look at stocks. He's a big fundamentalist. But this is one of the fundamental articles that or arguments that I've had against Solar City for a great deal. And I think he's seen the same thing in these that I've seen. And especially in Solar City, he dislikes it because he thinks it's a tower of cards. We've talked about a lot of these stocks that are using financial engineering, I suspect, to make sure that they could distribute as much stock as they could back up at higher levels. But it's awful hard to make a case when your product is probably 3 or 4 times what the other product is, as much as people want them. And as much as you can get other people, i.e. other taxpayers, to pay for your installation, it still ends up being like a second mortgage on your house, which was his argument. Anyway, the thing was down a little bit already, and as soon as he came out, just absolutely hammered it. Again, it's back into this gap that's probably going to act as support for a little while. Goes back to, was it October? No, yeah, October 11th. Of 2013 when this thing gapped up on fairly significant volume of about 17.8 million shares. In fact, there's a couple of gaps that go back into the trading on this. And, we're just kind of touched it out here, about 10 million shares. I suspect it's going to probably take a little while longer. Again, if there are stocks that are targeted, like coal. Coal was targeted by the president. He outright said he'd put him out of business. You have to take him for his word at that. One of the problems with all of these solar companies was that they were just the opposite. And the party in power, at least with the purse strings now, wasn't getting all the campaign cash from solar companies. Most of those incentives will all run out in 2016. So we are basically just several months away. I suspect why he didn't say it, that is one of the big reasons why he is talking about being short Solar City, and that is these things are not just companies that kind of break even. These are companies that lose massive amounts of money and are only in business because of the green checks from companies. And it's not a big deal if you're farmers and you control Iowa and you decide who's the original and who's going to be the next president of the United States. You get a little bit more power if you're in Iowa. Solar City, awful tough. Most of these places are in states that swing for the other side of the aisle and are going to be incredibly tough to get back. And like I said, politically, I think it's a loser. We will be back in a moment.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And welcome back. We're looking at the markets here, checking them out. We've got volume, we've got action, we've got just about everything we want. Right at 2,000 on the S&P cash, 3.12 billion shares. So volume's pulled down a little bit over the last 30 minutes or so. Not uncommon for this time. I suspect we're going to have a lot by the end of the day. And we will figure out what's going on. Of course, kind of getting belted by lightning here at the moment. So if anything happens, it's not any black helicopters, just regular old lightning and weather. Anyway, I had a question in the den about whether I wear any wearable tech. And the answer is no, but I wouldn't say that I'm that kind of person to begin with. I spent a lot of time working with computer hardware and software. But if you spend a lot of time in electronics, the first thing is you start taking off rings. In fact, all the people I worked with, if they had wedding rings, if they had necklaces, one of the first things they ended up doing was losing it. They didn't want to get fried. And a lot of sore feelings from wives on the wedding rings. But one of the first things that you got rid of. And I bought some really nice, expensive watches. They sit in a drawer. It got to be one of these things where I could wear it for a while, but you get used to stuff, and it's hard to get past. I'm actually looking at the new Samsung watch that comes out the end of September as one of the few things that may be interesting to me. But unless I'm going somewhere and trying to act like I'm $1 million rich guy and get the flash watch with the diamonds out, pretty much, don't have any rings, don't wear them. You wouldn't know if I was married or not because I wouldn't put them on. Like I said, if you get around engineers and you're fooling with electronic circuit boards every day, you quickly lose anything that is metal, and that's other. But yeah, there's a lot of cool stuff. The Under Armour stuff is very interesting, and I really like the one-handed zipper thing they have. I'm hoping that comes out this Christmas. If you haven't seen that, it's a magnetically coated zipper. Literally, you just get the two of them close to each other and they connect right on. If you've seen the way that a power connector on a Apple laptop hooks up or something, kind of the same thing. I mean, it just jumps right in. There's a lot of cool wearable technology coming out. But to me, I'm probably more the magnetic zipper guy than probably wearing a watch or a health band or something else. Just never got used to it. Okay, well, we're back down to the other side, 1995.85, and a lot of pressure going on into the close of the day. We've got the dollar index. It's finally really moved. I didn't like the move that it had, or the light move that it had through the support area. Today is the confirmation, down almost $1 to 95 bucks. Pretty much opens up the 93.30 level for the dollar. And that probably tells you a great deal that the first stocks off the bottom, and probably the ones that will rally the strongest, are those that will be helped by a weaker dollar. Now, of course, since we're in competitive devaluation, that is a moving target, kind of like trying to jump through a rolling donut. Pretty hard to do because, of course, every time our dollar comes down, we'll see the Chinese move their currency down, and then the Japan move their currency down, and then everybody is being moved. So very tough. Anyway, other stocks that I wanted to look at, I think it's, I have them back here. Let me see. Wanted to look at John Deere, wanted to look at Ross Stores. Let's look at Ross Stores to begin with. Another one with earnings last night. This morning in the conference call, or last night in the conference call, things were going not well after the earnings, but mostly because the earnings were fine, but they guided down a little bit, and the market doesn't like anything. As we've talked about for weeks, this market was priced for perfection. If anything is a little out of place, you get whacked almost instantly down on monstrous volume. The next particular low on this is $47.61. That had 4.1 million shares. You got 9 million shares today. Most of these stocks are coming back to these gaps. In fact, this stock is one of these stocks that went through a three-gap play all the way up and continued even higher. And that basically sets up a three-gap play back to the $30 level out here, and that would be it. So got to keep an eye on that. We want to look at John Deere, another stock that wasn't doing well, and Mr. Chanos jumped on this guy also today. And basically saying that these guys are going to have a huge, huge problem going forward. Anybody that, he basically put it down to this way, there were about $20 billion just in the United States spent on opening up a great deal of the oil producing country in the Northwest. And that equipment's going to be around for a while. There's probably not going to be a lot of demand for it. A lot of the stuff's going to get resold. But that's not just here in the United States, all over the world. So that if you're in something like Caterpillar or Deere, that these things have had their heyday, that since 2012, spending in this has actually been going down. They've been able to continue to cut costs but eventually all of this one day catches up to you. Let's take a quick look at Caterpillar. Not so bad out here. Maybe Caterpillar has a better market out here. Maybe it's just the earnings that was moving them. Caterpillar doing a little bit better today out here than the rest. But you can make a fairly decent case that this is making a small ABC down that would take another $15 off of it from $80. That would take you to about 65. Let's see if there's anything else out here. Yeah, there's a big gap out here waiting for this stock that goes back. Let's even go back a little farther out here, see where that gap comes from. Okay, that gap goes back in trading to September 1st of 2010 on Caterpillar, and that's all over that $65 to $67 range. And I think you can just kind of do a ballpark on this and see that that's probably where Caterpillar is going. John Deere, let's go back to it just a second and see. Okay, this blows through that. So if it goes through 78, 79 bucks, 69.51 is the next one, and what do you have? $59.92 is the next. It's got a fairly large gap that had volume at about the 66, 67 buck area too. Maybe these will meet back in twain, but very little to say that anything is going to vastly improve in this area anytime soon. See, gasoline funeral. Yep, a little bit of move out here. Of course, we're headed back down to lows one more time. 1993 on the S&P cash, 3.2 billion shares, and it looks like they're ready for the rout. I'm wondering if we can break 1990 or if that's going to be one more test of the lows out here. And like we said, this got out of hand very quickly. But I think we've probably got some kind of low around here. Maybe it's Monday, but probably around here for a little bit. Oh, we were talking about that. SPYs, yeah. Let's take a look and just see where this market could bounce back to fairly regularly if we just are looking at this little segment from the July 20th high down to the low of today. The retracements would be on the SPYs would be 204.86 for a 382. A 50% retracement would take you to 206, and a 618 would take you to 208.26. So is it over now? I don't know. We've had a lot of volume. We've had some monstrous put call numbers. It's Friday going into a very light summer weekend. Is somebody going to step in on Monday? Is there going to be some intervention? Maybe, maybe not. But if you do start bouncing and you're thinking about where and how far this could go back the other way, 204.86 on the SPYs, 206.56. As bad as this is, I think you'd probably be looking at the first two levels as to where this is going to go, because I think a lot of people would just be dying to get out just from yesterday's open. And that would take you to the 206.56, and wouldn't be that much. But, you know, can weirder things happen? The answer is yes, but we'll have to look at it. Look at Joy Global. That's a good idea, Mr. John from Philly in the Den. Okay. Retracements basically on this take you back up to 32.47. Is that right? Yeah, 32.47, $34.92. There's a gap right at that level. Not a big gap, but a gap, and that's adds a little bit to the fact that maybe you're going to look at that 50% retrace at 34.92 on Joy Global. Not a bad looking chart out here if you're thinking that maybe you've got a short-term bottom in. You've got a nice little doji out here. Been kind of going sideways out here. Kind of nice to see that this one didn't get smacked as hard as John Deere, being in the same industry. And 90.90, we're back to the lows once again. See if there was anything else. I want to look at some of the tech stocks fairly, because for Facebook, this one had come off the highs fairly significantly. What's probably more interesting to me is that Facebook really didn't give you a clear signal that it didn't have volume at the top. But certainly the last few days have told you that any of these stocks with high multiples are coming back, and coming back with a vengeance. 39 million shares, the first high on July 21st. We got July 6th on the second one. Didn't quite make it into that high, but it did have 4 million more shares than the first high. Went kind of sideways for a while. Of course, the last couple of days, anybody is shot first and asked questions second. But not a bad-looking high. Facebook in a fairly decent business. Got kind of a monopoly out here. I don't know how long it's going to take. Basically, you've got the last major high on March 24th at 86 bucks and 7 cents. We hit 86 cents today, and it gapped out of there. You also have some strong moves up in Facebook from the 23rd of June that had 50 million shares. You got 40 million shares or 44 million shares already today. You do have kind of a congestion zone, a wide congestion zone, down to $85.37 when you look at the confluence levels, which are going to be very important now that we're coming back down the other side. But I don't know if you can say in it. Yeah, Netflix down. Netflix is kind of very interesting. NFLX is another guy out here. This one is back to fairly significant support in that it gapped up on the 16th of July with 63 million shares. It's back into that gap, got into that gap today, and pretty much is sitting right on top of it with 24 million shares. So some of these stocks are showing a little bit of strength. Unfortunately, that is double the low of July 28th on it. And that would suggest that even if this bounces, you're coming back down to 104 again, and maybe even lower in Netflix. Netflix was one of these companies I've never understood the belief that no one else could ever come in and compete with them. For me, it's not a monopoly like a lot of other things like Facebook. You just put things together. In fact, I wrote in my newsletter today, and I think we brought it up on the show yesterday, about HBO getting in bed with Amazon to make sure that anybody with the Amazon Fire Stick can watch HBO at home without a contract or a cable provider. And maybe we'll talk more about that tonight in the Tech Insider Hour, in the 4 o'clock hour of the Tom O'Brien Show. But that is very interesting. You are up against a gap. You did double the volume of the last minor low out here. My guess is the best you could probably hope for right now is at least some consolidation. You probably, with the higher volume out here, would want this thing to at least get back to the bottom of this gap that happened on the 15th of July that had 30 million shares. And yeah, that low out there is what? Low of the day is 97.05 on Netflix. That's, I think, would be the first even possible safe place. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Hopefully we're back. It's continuing to lightning quite hard. And I hear we are from our engineer. Anyway, off 48 bucks on the S&P cash. What a run in this market. 1978 on the S&P cash, 3.3 billion shares. I suspect we're going to get that 4.3 billion shares that we've been looking for 7 months, as one way of saying that we've broken out of this market finally. This may be a short or a small part of the exhaustion move in this market, but not going to change probably the retracement levels that much, but we'll take a look at it. In the meantime, we want to look at a few more stocks and talk about some things. Trying to remember what I wanted to talk about. Yeah, mine's kind of a blank now. Let's look at FDX. Especially interesting to me is that, of course, crude continues to plummet. At the same time, these delivery companies continue to plummet. We are getting some nice levels on confluence levels as these things bounce. Starting to look at things like FedEx and seeing its ABC downs set up these confluence levels. In this case, backed up to 166, 167 on FedEx would be a fairly good place to short for at least a retest of today's low, 156.50. But you would think, in fact, we've been talking about the airlines and why those things were headed down, why energy was doing so poorly. We speculated, I think yesterday or the day before, on American Airlines and whether this was an ABC down. Certainly thought that we're going to at least test $37.80. But this is these are fairly large and big ABCs. In this case, what do you got? 16 bucks from 44 bucks takes you right back to 28 bucks, which is the October 13th 24 low. So a lot of these stocks look like they've topped out and could go back to where they started from, which in the case of American Airlines is that 2014 October 13th low back here. But kind of interesting. In fact, I bet if I just do the expansion out here, we probably, if we use the more generous one, that takes you right to $28.28 as an ABC down. And to me, really looks like that's what you've got set up. And kind of interesting to see that it doesn't, that, you know, you would think if it was just specific to energy and the energy was coming down, but certainly looks like the rest of the market is setting up for tests of fairly significant lows out here in the markets. We talked about that. What else do we have out here? Wanted to look at, see how some of the other stocks. In fact, I've been so busy, I haven't had a great deal of time to look at some of these stocks. Wanted to see how Chipotle had done. Of course, this was the darling of the market. What you're really looking at Chipotle and Chipotle or whatever it is. Out here was the January 8th high. That's 727.97. January 8th, 2015. You went through that with some significant volume and broke that high on the 22nd of July. We're now back to that sign of strength. And my guess is we're a little bit more back into it. But back below that January 8th low too. This gap has opened up. That gap is from, what, 675 to 695. So a lot of these things are starting to play out, even on these bigger, well-known stocks. In the meantime, sell when you can. Oh, God, hopefully you did. We'll see you Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.